Hey, it's Chip again. Just wanted to get back with you. By the way, if you get any valuable content out of this video or my other videos, please like and subscribe to my channel. I would love to see you more often and be able to talk to you more often. So all that being said is I want to follow up my previous video with this one because I want to talk to you about jobs. We have talked about to a pretty much nth degree this year, in my opinion, from a real estate perspective. Yes, things are slowing. Things have slowed down. Even we are below 2017, 18, 2019 pre-pandemic sales numbers in the United States. If you're comparing year over year, if you look past the pandemic year, look past 2021, which was an incredible real estate year from a sales perspective and a home value appreciation perspective. Right now, from a sales numbers perspective, the number of people closing sales on selling their home and the number of buyers closing sales to purchase a home is down below pre-pandemic levels. And so that was a watermark for me. I thought if we got back to those 2018-19 numbers, it kind of more normalizes the market. Okay, we're stepping back because of the interest rate situation we're in, because we're in a recession, and there's some uncertainty out there with the economy. But honestly, I'm a little surprised that we have dropped below that watermark of pre-pandemic sales levels, and it continues to dip. So we'll see how this turns out. It's a very interesting dynamic situation, and it's a housing market in my lifetime I've never seen before from an adult and selling homes perspective, which I've been involved in real estate since 1996. And so since that time, even through the Great Recession, which was more sudden, it was an impactful event that happened from a financial crisis perspective, which then led to a housing crisis. People getting foreclosed on, short sales, ultimately losing jobs to where they had to have those situations happen to them, unfortunately. But right now it's just like a slow drip of pain for people in the real estate industry. But I'll tell you, there's a lot of opportunity out there, and I've said that a number of times. I'm looking for opportunities every day because people are going to need rescuing. People are going to need help. And as real estate professionals and in real estate investors, we need to be there to help them through that situation and, help ourselves out with a potentially great investment, help them out by getting them out of a bad situation. So if as an investor or a real estate professional, there are some opportunities out there. But I will say, going back to jobs, great jobs numbers came out this week. Awesome job numbers. I mean, the unemployment rate still extremely low. Full employment for all intents and purposes. People who want a job, have a job, and can get a job. And there are still a lot of people on the sideline not working, but they seem to be folks who don't want to work. And so with jobs comes income. With jobs comes stability and confidence. And I still say that is what's propping the housing market up to where we are at this point in time. If joblessness gets worse or increases, and the Fed is working really hard, the reason they keep raising these rates is because of these jobs numbers. The jobs numbers are too good for the Fed. They want to slow the economy. They want for the unemployment rate to go above 5%. I mean, frankly, that's what they're really looking at. They say 4.5%. I think they want it to target over 5% unemployment. And so until they reach that goal, they may continue to raise rates, tighten the money market, and create that situation where unemployment goes up and the employment numbers look worse and worse. But right now, they're hanging on, and there's tons of employers. There's I think I read on the news the other day, 10 million open jobs in the United States. 10 million. That's amazing. So, that's not going to change anytime soon. But if they keep raising rates and slowing the economy and making it harder and harder and more expensive to borrow money, both as individuals, but more importantly, for big companies, small businesses, big corporations, if it's too expensive to borrow capital they'll just stop borrowing capital. They just will stop building. They'll stop hiring. They'll start, retracting and laying people off to create more capital so they can continue business. And so, of course, we've seen layoffs in the real estate industry. Opendoor just announced today that they were laying off about 550 people, which is a third of their workforce, if I'm not mistaken, because they're an iBuying program where you can sell your house to them directly, and then they try to either flip it for a profit or they keep it and rent it to people. But they're getting so upside down in the houses they overpaid for last year that they can't flip them out and make money. They're losing money, and then the rent rates have gone up, but they're not going to go up as significantly as the home valuations have. So, they're in a world of hurt right now. But there's a lot of real estate industry leaders out there, big publicly traded companies that are, that have really bet the farm on the last couple of years, and this year they're getting hurt, and next year I think they'll get hurt worse. Not a good thing, but it's just the nature of the beast in this real estate industry. You got to know it's cyclical, it's seasonal, and the economy is cyclical. And right now we're down. We're going to go further down, but it will come back up. And I think, again, my bold prediction, I've told you this before, it will raise. The economy will raise from the ashes in 2024 and 25, and I think we'll be pleasantly surprised at a roaring economy in 25, 26, 27, and hopefully beyond. But we've got to weather this storm in 2022 and 3 to get there to the promised land, and it will be a good one when that happens, but we've just got to get through it. So jobs, number one. Jobs are great. The feds are trying to kill it. If the Fed continues to kill it, which they will, the recession will get deeper, people lose jobs, and then more importantly, the psyche and the psychology around could I potentially lose my job prevents people from spending money as much. They try to retract their spending, and that just causes more slowdown. It's a self-fulfilling prophecy that they are inducing and want to continue to induce. The only way we can fight back is as companies continue to hire, if you need employees, and continue to spend money. I mean, I don't know what else to say. I mean, we got to keep the economy going in some way, and that's the only way we have as individuals and as small business owners and big business owners to do that. But there comes a breaking point when you just can't do it anymore, and that's what the Fed's trying to reach. So hopefully we'll get some more good news over the next couple of weeks, and you'll hear from me, and we won't have such dire news with these rate increases on an ongoing basis. But I think through 2022 we'll see one more, and then probably yet another one or two in early 2023 from a rate increase perspective, just inflicting more pain on the economy. But just look at the bright side. Like I said a couple videos ago, the great Jerry Garcia, the Grateful Dead, the song Touch of Gray. I love that song. And every silver lining does have a touch of gray, which is what we're talking about today. But you have to have a silver lining to have that touch of gray. So there are silver linings. There's areas of opportunity. You just need to look for them and capitalize on them while you have a chance. People get rich when the economy crashes. They don't get rich when the economy's booming. And so just keep that in mind and get creative. See you next time.